Hello, everyone. Welcome to today's session. We are going to be able to get back on track here now utilizing the new TradingView format. And my goal for today's session and going forward is to, number one, we're going to walk back through the top-down approach. What's the market doing? Where are we at in the trend? What are we looking at in terms of sectors? What are other factors such as breadth, momentum, sentiment, those factors? We want to be able to look at those and determine the current state of the market. And then I want to talk a little bit more about some of the other functionalities that we're looking for in terms of that process to say, where are we at in the trend? Should I be trading anything? If so, what am I trading and where am I going to be looking for those in terms of the scans, the filters, and just kind of the daily process, and start going through that as we're switching over from the older TradersPro software and moving that into TradingView. There's a little bit different user interface, and it takes a little bit of time to get comfortable with, but not too much. So I'm going to kind of focus on that each time I do one of these posts and updates for the training, and hopefully that speeds up the learning curve here for you as well. Also going to talk a little bit about just some of the functionality still as you know, you're newer getting into this format, and then also the Discord channel that seems to be a newer type of platform for a lot of folks. And again, Discord is nothing more than just a website. It's just a members type website where you can log in and you get access to different areas of that website. The advantage of Discord is it's very flexible and allows for a lot of additions. We can add things, we can subtract things, we can add upgrades or bonus items, additional things for you as well. And so it just is a very easy platform to utilize. Plus, Discord is becoming very popular in the trading community, and so you may have different people or sites or softwares that you follow, and you want to be able to track those inside of one location. Discord is nice because you can just click on anything that you're following and be able to access that content inside of that room as well. And I've got a few of them that are sitting here, and some are more active than others, but you know that's where a lot of the content fulfillment is going, and we are also doing that here as well. Now, when you get logged in, if you get lost and it might seem like there's a lot to look at here, just start with the start here and then follow the steps. I've tried to lay this out so that it's absolutely as easy as possible to get transitioned over. Don't ignore the videos. I know sometimes they're just boring and hard to watch, or whatever the case may be, but the information is there. So if you don't want to watch the video, then you don't have to, but you're obviously not going to get the information. So take a few minutes and try to keep them relatively short. These trainings are going to be a little bit longer because we've got a lot more to cover. But again, just go through this. The methodology, step one, signing up for the newsletter, making sure you got your TradingView account, understanding the methodology, what we're looking for and why, going to the indicator set. Indicators are going to be here. You can get those where we've already got those basically pre-built. You just simply have to click them, open them up, and then add them to your chart. The chart layouts, we've already got those pre-built as well, so that you can simply just click on any of the layout. If you want this layout, if you want the basic layout or the two chart layout, you can just click on that, open it up, come to this drop down, click on make a copy. It's going to ask you to rename that copy, and then it's going to save it in your recently viewed or in your layout. Okay, you can have multiple depending on the level of trading view access that you have. There may be some on the free accounts. You may have one, I think, for the layouts, but there's different settings that you can have there. You can then also click on this load layout and access the saved layouts that you've got. So pretty easy process to be able to simply just click on the setting, make a copy, and then you've got really the two that I primarily going to be using is the two chart setting and the market trend analysis. The single chart setup is simply just the old school format that we had on the TradersPro software, which I also really like. This just a clean, big square chart where we're looking at price data, and again, just a couple of things to when you're in this setting and you're looking at the charts and you're utilizing these two formats here, which are, let me get my drawing tool out here. The three indicators that we've got on TradingView are the Fibonacci snap tool, which is the orange colored lines that's snapping to this area, and depending on the time frame that you're looking at, or even whatever is inside of the viewable area, is what it's going to snap to. So if I'm grabbing more data and there's more information, and it might grab that low over here, and it's even going to reverse the trend. So now this is the high point, the low point. It's a dynamic tool where it's going to be looking for the current trend on that chart, and it's going to connect to that time frame. That is the snap tool right here. And again, you can access that just clicking on indicators. If you don't have it, click on indicators, and you can type that information there as well. I suggest you go back into the chart layout and watch the chart layout videos. That's going to explain everything there as well. I don't want to rehash everything that we've got, but just as a reminder, you want the snap tool, you want the momentum zone tool. If for some reason you decide, hey, I don't want this, I don't want to see the momentum zone coloring, I'd rather have the traditional charts, then up here on this gear wheel, you click this gear wheel, and then the top is the symbols. Make sure that you check those. They need to be unchecked in order to see the indicator, but in order to see just the traditional chart color pattern, so we've got an up day and a down day, then you can do that as well. If you kind of want a mixture to see, is it a down day and am I inside of that current trend, then you can do just the wicks, okay, or the body. Not the body, but the border rather. So the border, you can see it's going to show me that red border is a down day, still in a green uptrend. So if you prefer, on the old TradersPro software, it's the black bar that was filled. It was you had a solidly filled black bar right here, even though it was still green. And in this case, you can do something similar to where if you want to know if it's an up day or a down day, and still have just the trend color, then that's the way to do that there as well. Okay, that's just a little bit more advanced type settings to be able to utilize. And if I've got them all just unchecked, then I'm just going to get just the trend location here as well. That's your momentum zone. That is your Fibonacci snap tool, and that's just that core. That's just that core setting versus the 2-chart setting. Now, when we get into the 2-chart setting, we're looking at a daily chart and we're looking at a 1-hour chart. Both still using, and this 5 right here, if you drop down, it's going to give you the indicators set here: Fibonacci snap tool, momentum zone, volume, SMA 220. SMA is the simple moving average, and we're using the 20 period and the 200 period. And I like to just gray them out so that I can hardly see them, just because I don't want to, I don't want a clunky, messed up, busy chart pattern. I want to keep it as clean as possible based on the current trend pattern. And it's nice to have the 20 and 200. That helps us in relation to where are we at in the trend. Are we a long ways away from that 200 sometimes, or are we close to that 200? Okay, a long ways away from the 200 could mean that trend maybe towards the end of the trend, even though we're starting to start a new uptrend right here. That 2200 gives us context. Where are we at in the trend? In addition to the trend condition indicator that we've added, that is also going to do that for us. And on this 60-minute time frame, you can add it. Obviously, you can add whatever you want and change that up and add this indicator over here, or whatever you want to customize that to your own liking and your own setting. That is also there. That's also on this setting. So the market review setting under Discord, and you go back to the chart layouts. This market trend analysis setting, if you click on that, it's going to open up this type of setting. 1 hour, 1 day, this is going to have the trend condition indicator and the price activity momentum and fib tool. That's going to have them all on here, and you can use them for charts as well. It works great, just to look at individual stock charts. But in this case, what we want this top-down approach. What is the market doing? Okay, and we're using these indicators. This is a bullish. These are all exponential moving averages. So when they're all moving nicely and moving higher, we want to know that. When they're kind of compressing, we want to know that. When we have the majority that are starting to move one direction or the other, we want to recognize that. So we usually, in my nomenclature, as I'm explaining these, I'll say majority bullish or majority bearish, and I'm referencing this number right here. The majority of those moving averages is bullish. We've got 10. Obviously, if it was like 7 and 7, then and there is 14 total on here, so this would be kind of your neutral setting. And then also we want to look for compression and expansion. Compression looks like that. Expansion looks like that. When we have a compressed trend, it's typically going to expand out of that. We don't always know the direction though. Is it going to be moving higher or lower? But in this case, we can add all of the all of the pieces to the puzzle and get a good indication of what we're looking for price activity. That is the market review, and it's essentially replacing the market trend tab, and that is that setting there as well. It's very effective in, again, looking to, when we're dealing with really wide trends, the probability of the width of that trend expanding becomes smaller and smaller the wider these get. Okay, it's not going to go up and fan out forever. At some point, you're going to be at the top of a trend, and there's nobody left to buy right there. So you're going to get selling activity and some of that selling supply that is going to be created there as well. So really, those are kind of the four settings. You've got your Discord location. Number one, you've got your training, your methodology. What are we doing and why? Indicators, you're going to add each of those indicators, the Fibonacci snap to a momentum zone, trend condition, your chart layout. This is going to get those 3 chart layouts or 2 chart layouts that we talked about. And then the screens. The screens are going to get into these different pieces here. So really, we don't add the screen to this setting, but where you're really going to be utilizing the screens is in 2 locations. Number one, you've got it on the chart itself, okay? And so that's going to come down here at the bottom. If you've got everything closed and you're like, where the heck is it? I don't know. It's all the way down here. There are 3 or 4 or 5 different things: your paper trading, and your screener. When you click on that screener, it opens up, and you can drag that to make it most of the screen or part of the screen. I just want it so I've got the top 3 or 4. I want this chart square, and then I can also just maximize or minimize the entire panel. So if I don't need the entire panel, then I can minimize that, or I can maximize it if I just want to look at the stocks themselves. Obviously, that's going to remove or hide the charts that you're looking for. Now, once you've got those settings, and again, you go back into your Discord screens, each of these are going to give you the instructions on how to set up those settings. Okay, it's going to take you 5 minutes to do that. Take a second, click this, open. If you need another window open to look at the other settings, then do that. And then this is going to tell you which ones you want to have at. Once you've done this one time, then you've got them saved, and you're not going to have to do anything else. And these are updating daily, and they're actually updating every 60 seconds. So these screens, you can have a stock that's moving intraday and will start to show up in these screens as well. Now, these settings that you've got right here are adjustable, but based on the drop down right here, or the three little buttons, 3 dots right there. That's going to give you these settings: the percent change, the industry, the price. Okay, we don't want them all. In this case, I only want a few. I want the technical rating, which is going to give us how powerful is this trend. The RSI, which is also kind of like the rank on the other software. Not quite, but very similar idea. We're looking for these strong stocks and these solid price uptrends. And then the sector and the industry. I want to have an idea of what those are doing as well. When you see that just changed color, it just refreshed again. So it's looking for new stocks that may be in there. Now I can click on any of these stocks, and then I can just arrow down as well. Okay, so once I've got these in here, now I'm just arrowing down to look for stocks, and this is in the muscle stock group. Okay, so this is going to be set up from this muscle stocks. This was on the chart. Okay, so I click on this Google Doc. It's going to take me, and here are my settings that I would need to do. So I could leave this doc open and then just go back to this, and then just click on that, and then I can compare and say, okay, does this look like mine? I've got too many too many tabs open right now. If not, then make it look like that, and then it'll typically automatically save it, and then you're set up. Now that's the muscle stocks. You've also got your new buy list. that there's not very many in here. There's only 4 right now just because markets are trending lower. But you've got Shake Shack, which is in there, and it's actually trending back down here again as well. Not a whole lot to choose from, but that is going to be your list. Now you can say which ones have gone into that new buy signal. That is your list to be able to focus on, and that can be intraday or after the market's closed. The other location is going to be here on the I'm going to close out some of these, is on the screener tab. Okay, so when you go into this and you've got a couple of different things, settings on the screener page, this link right here, I've got it in the docs as well, just opens the screener directly. And then from here, you can select your criteria. And I've got a bunch of videos in there on how to do that as well. It's a pretty simple process. But once you've got those, then from here, I can do the same thing. These are going to match up with my chart settings. And I can see here's the 4 stocks that we've been looking at. Just gives me a little bit different perspective if I want to see my settings, if I want to go out and not necessarily just have it on the chart itself, and then I can save those. So we've gone through in some of these trainings and videos. In fact, yeah, you're going to want to watch these. These are going to go through this process and explain which what the settings are, why they're set up this way, how to get your desktop to be able to look the same way, and then also just setting up. Now, really, there's only 3 settings that you're going to need for the most part. I've got 5 of them here: a buy, a hold, and a sell, and the corresponding setup and signals, and then also the muscle stocks group, which is that core group, and then also you've got the new buys of that group. Okay, and I do explain in all of the trainings how to get those, what the trigger signal is here to go from hold to buy. Make sure you spend some time on that as well. Once we have those settings, then we can go to work. Okay, so once these are all set up, then our process is, what are we looking at? Market conditions. We know that the number of stocks, the breadth, the number of stocks above the 50-day moving average is really low. It's 20.66. That means that 22% of the S&P 500 stocks are trading above the S&P 500. That's not bullish. That's bearish. Okay, that means that most of them, the majority of those stocks, are trading below the 50-day moving average. And you can see that it's bearish 14. It can get a lot lower than where we are now. The line can go all the way down to 10, and those are pretty significant areas of reversal. This is acting similarly to the buy-sell ratio on the other software. Very similar concept and very similar outcome. And we can utilize that effectively to say, are we at an extreme one way or the other? Are we way at the top or are we way at the bottom? Right now, we're kind of way at the bottom. And is that trending? Is that accelerating, or is it starting? Are we starting to see some pauses right here and some buying start to come back into the market? Those are ways to be able to also utilize that and say, where are we at in the trend? And obviously, as we're going through, and each morning I go through this over here on the left, the morning update. You can click on this. This is going to open up that YouTube video. And again, I try and keep these relatively short. They're, you can see 6 minutes, 6 minutes, 7 minutes, 7 minutes in the morning. This is pre-market, and just talking about what are the current market conditions and what should we be aware of today, and what should we be aware of as a whole as markets are. They're just always dynamic and they're just always moving. And we know that we're at the upper end of the trend. So when we were looking at that real long-term chart and saying that 20-year time frame, we can do the same thing here. We can take this daily chart and we can go out. We can change that to weekly. I can even change that to monthly now, okay, and go to 1 month right here. Now the A will drag it to the chart. Okay, it'll connect it to the chart. I can do A here, and then that's going to give me a little bit longer time frame. I want to squeeze in a little bit more though and look at this going back to this time frame. So this is going back to 1992, 99. You can see these little hiccups of trend that we had here and here, the downtrend here. This was the dot-com bust. This was the subprime bust. It's kind of small on there just because we've got so much data on that. Then we had a COVID. This was our little COVID move lower. We had the run up after COVID. Then we had that retracement moving lower, and now we've got where we're at currently. Now, there's this is the biggest factor of risk that we're dealing with, and that is, look how far on this is a monthly time frame of S&P 500. Okay, the width of this, the fanning effect of this, when we get this breathing of the market, we get compression. Okay, we get compression, and then we get expansion. We get compression, we get expansion. We get compression, and we can get expansion the other direction. Typically, and I've mentioned this before, the S&P 500 is not the same S&P 500 as it was a year ago or 5 years ago, and definitely not the same S&P 500 as 10 years ago or 20 years ago, and absolutely probably not even close from 30 or 40 years ago, because the S&P 500, they can swap stocks in and out. Okay, so the S&P 500 theoretically is never going to have a massive ugly sell-off, because stocks that are working, newer stocks, 20 years ago, Facebook, Apple, Google, or not Apple, but Google, Facebook, those are new companies. They didn't even exist, and now they are made up. They are the majority of what the S&P 500 is. So this is built to have a bullish bias. Stocks that are garbage, the stocks that are going bankrupt, they're either going to get bought out, or their price is going to be collapsing. They're going to get kicked out of the S&P 500. So the S&P 500 is an evolving, breathing mechanism, just like the stocks inside of it are as well. And we can also realize that actually helps us, because in the long term, S&P 500 is naturally removing some of those stocks for us and putting in more relevant stocks that we want to be aware of. So that helps us in that, because they are more relevant, we're dealing with a more relevant market. Okay, so in my opinion, it's the most updated and accurate that we can be utilizing, because it's including all of the stocks that are the most relevant. Now, it's obviously not going to include all stocks, but it's the most relevant, and it's worth paying attention to. So when we're looking at this price activity, and part of managing a portfolio in this case is looking at this range. Okay, would we be treating risk differently here than we would here? Okay, I would say yes, because the probability of us retracing back down, now this is a monthly chart, so this is a really slow chart and takes some time for it to turn, but you can see in the last 10-year bull market, we're just as high as we've been, all-time highs, and that trend is fanning out. That adds downside risk. Okay, the probability of this now continuing to just expand higher and create this massive fanning effect, if it does, and we're just setting ourselves up for some major pain, but we get these consolidative phases that can last a while. Okay, so now if we look at where things were at back in 99, okay, we were at the upper end of this trend here. We're also getting the corresponding downtrends. We're getting an uptrend, corresponding downtrend, and now we've had just nothing for the most part but uptrend. This was COVID. It didn't last very long. That was 1 month. Retrace all the way back down. Now we're right here. So again, this is important, because we're looking at top down. Top down is, what is the market doing? The stock market as a whole is moving up. It's moving up aggressively, but it's at the upper end of that aggressive move. How much do we want to try and anticipate more upside? Now, when the momentum is really, really strong, we want to continue to ride that train as long as it's there, but we run into some risk, and that risk can be managed at the granular portfolio or stock trading level, which are our individual stock picks that we would be adding to a portfolio. So I could say that and say this market conditions are the upper end of the range. I only want to buy, stocks on up days, or I only want to add, maybe half the position size that I would normally be adding. Okay, the market structure and the trend, the overall bullishness and bearishness that we're looking at here with that market structure and where it is in the trend is going to determine the position sizing. Okay. Now, this is obviously for individual equity trades, looking to buy stocks into a portfolio, not necessarily saying, I'm just going to buy the S&P 500 and wait for 30 years, which is not a bad strategy either. Okay. That probably should be most trader investors' core strategy, is saying, I'm going to buy the S&P 500 and I'm going to own it for forever. Okay. And I'm going to ride along lot of these ups and downs out. That's a really long-term picture, 20, 30, 40 years. So if you're in the position where you actually need the money in your brokerage account and you're spending that money, then you can't afford to have the types of volatility that owning 100% of the S&P 500 might create, because you can get years, even though we've been, moving higher and things have been moving nicely to the upside, we can have years that are down, but don't buy into the doomsday stuff. It happens. Markets just move in cycles. The Fed is involved. We're dealing with inflation. We're dealing with growth. We're dealing with different economies in the world. But in terms of, is there, a massive crash, and that's just talking points. It's just blather to get us all hyped up. Now, I'm not saying that can't happen, but but let's focus on the reality. The reality is the price structure, right? The reality is what's happening right now in the markets. Let us determine if that trend is risky or not, and we can very simply do that with price activity and where are we at in these overall trends, and then managing that risk accordingly. Because one of the biggest fears is the fear of missing out. Well, what if AI blah blah blah, or what if go back 20 years and say, what if the internet does XYZ? Okay, well, does the internet do what everyone thought it was going to do? I would say yes, times 100. Is it going to do things that we anticipated that it doesn't do? Yes, times 100. It doesn't do a whole lot of the amazing things. AI is going to be the same way. It's going to do amazing things. It's going to change the world. But is it hyped up? Markets are designed to be hyped up. That's what they are. They are a speculative location. It's just a speculative auction place for buyers and sellers to determine valuation in real time with their money, which is, there's no better indication of commitment than money, and invested money and invested capital, because that means a decision has been made. Okay, and if that decision is to the upside, then that's where the capital is flowing. That's the direction we want to be. If the trends are weakening and coming out, that means capital is leaving the markets, and somebody with deep pockets and big money and a whole bunch of people doing a whole bunch of analysis are determining that it's time to sell. When we start to see those indications, then we can make our assessment at that point as well. And we really feel like these tools and indicators that we've got available to you now are going to be very useful in doing that. So let's jump back to this time frame. Okay, now here again, if we're logging in, we're looking at what are the market conditions. If you want, I have this set now to back to daily. This other one that I was looking at, I think I have a couple windows open. There we go. This is the monthly one. You can obviously change those time frames and look to get just a little bit different perspective on where are we at in some of these trends currently. Then from there, once you've got your filters and your screen set up, then you can go in and say, which ones are my new buys today? Is there anything that's interesting there? Is there anything that, there's nothing really super interesting. The last 4 or 5 days there has been lots of stocks to choose from. There may be days where we don't get any stocks. There may be days where there's a lot of stocks to choose from that are entering into new trend cycles there as well. Okay, let me just go back. So really, those are the core features. If you're just getting familiar and comfortable with the layout and the strategy, go to start here. Make sure you follow these processes and getting all of the indicators set up, and then from there, you can go in and watch all of these trainings, watch the morning updates. And again, I'm not saying that I have a lot of things that are of interest to you, but it's more of just the functionality, the process, teaching the process and the methodology. And then as you learn that, then you can obviously do a lot of things on your own. You can see that market just shifted to 9 now on that daily time frame. So we're getting some weakness here at the upper end of this range on S&P 500. Both the long term and the short term, this 60-minute is getting weaker here. It's already majority bearish. I think I'm going to end on that note. About a half hour long. That's plenty to digest and plenty to go through as you're getting some of these things set up. And then And then on Thursday, we'll start getting back into here's market conditions. Here's a stock to look at. Let's point out an entry. What is our risk going to be for that entry, and managing the trades a little bit more effectively or a little bit more granularly. Where's our buy? What's our risk? How are we using the new buy here? Because we're going to be adding into the dollar amount. Okay, we're going to be doing the same thing. Before we were talking about $2,000, 2% of $100,000, and that's $2,000. So from here, if I were to say I want to buy this stock at this price, and I want to use 2,000 at risk, where does my stop loss need to be? What is my dollar amount at risk? So here I could quickly go $250 is the dollar amount at risk. My portfolio or position size is 2,000. And let me add the limit price over here. And then that's going to add that to my chart. Okay, so then this is kind of squishing everything in here. Let me actually move that over just a little bit. Okay, so I could say if that's the setup that I wanted to take right now, then I can set that up based on here's my $2,000 at risk, or my 2%, and then drilling down into the actual percentage of the portfolio. This number right here is the portfolio percentage at risk. Okay, so if $247 is and I have a $100,000 portfolio, then this 0.25 is my risk of that 100,000. Okay, so I can control this too. Obviously I can say I want to take more risk than that. Let's go 300. Well, that's going to adjust my stop loss as well. So I can control that number. I can manage the stop loss just on the number, or I can say, man, that stop loss is a mile away from that. There's no need to have that stop loss that far away. Let me drag it all the way back up to here. You can see I'm dragging that, and it's changing the number over on the right. And I can set my stop. Let's just set it right at that low right here. That adjusted it to $150. So if I said, let's do 150, now my stop is at 845 if I'm buying the stock as of right now. Okay, is that acceptable? Yes, no, maybe so. Okay, whatever it is that I've determined for my trading plan, this is my control mechanism. Okay, this order form is my control mechanism. And on your chart, if you don't see the buy sell buttons here, then you can go to settings, and then over here on trading, you can see the buy sell buttons. Okay, or like this, and if I were to uncheck those, then they're going to disappear. Okay, now also remember that each box has its own settings. Okay, so this one I go to settings and I don't have it because I don't want it. I don't need it on all of the charts. I just need it on one. So in this case, you go here, you go to trading, buy sell. I want that one checked. Okay, I want the instant order unchecked. Okay, you'll get there eventually where you maybe have one of the displays where you're adding in an instant order. That means you just simply, if I were to click that buy button, it would directly send that order to my brokerage account or to the paper trading simulator that may be set up. It's live and it's ready to go. So I can make my transaction directly from my analysis that I am determining. I've made the analysis. I think it's worth a shot. And again, there are no guarantees. There are no certainties. We're simply dealing with probabilities. So we want to try and create the edge. What's the market doing? Is our pattern sound? Is our stop loss sound? And is our risk management sound? The things we have control over. We have control over when we're buying. We have control over how much we're buying. Okay, the position size, and we have control over where our stop loss is. So the stop loss here is at 845, and that's controlling that downside risk, because who knows, sometimes crazy things happen, an earnings report, a lawsuit, a tsunami, who knows what's going to drive a stock down, but we always want to make sure that we have that line in the sand established. That's our stop loss, so that if and when we are wrong, and we will be wrong at probably half the time, we want to make sure that this is managed. Okay, there's nothing more frustrating than having a big loser. Okay, we just cannot afford to ever have that happen, and we manage that with this. Okay, if you have a $2,000 account and you've got $2,000 invested, you might have to do that because you've got a smaller account. What I would suggest is not trading it and saving more money, okay, and adding more money to that. It's trying to speculate your way into a bigger account is a fast way to blow up your account. So if you've got a smaller account, try and grow it to 5,000, 10,000. Or just trade super small right here. Okay, you could say 2,000, and maybe you are one trade at a time. That's also fine. If you're doing one trade at a time and managing that versus trying to build out a portfolio. What we try and do with the wheel model is add multiple trades at once every day, so that we're dealing with diversification across days. Okay, we're dealing with diversification across time and across different stocks, even though we are still in the stock market as a whole. So we have market risk. We're still taking market risk, but we're diversifying out among the number of days and the number of holdings and the timing that we're adding into those holdings. Okay, because market conditions are shifting. You're getting big money that may be shifting into gold, or maybe shifting into consumer discretionary and out of technology. There's always going to be something that the money is moving from and where it's going into. Okay? And typically it's not moving out of the market entirely unless we get one of these bear markets. Then more money is shifting out of the markets, moving to cash or moving to something else. But typically it's moving from one type of sector rotation into another, or one theme. Maybe it's moving from AI to nuclear, or AI and nuclear, because you're getting data centers, you're getting nuclear, you're getting now you're getting a lot of the quantum computing stocks, which we've got one of those, QBST, in our portfolio currently. Let me remove that and go here, and we'll look at that. So you can see from $2 to $10, this has been a massive run up here. Those are showing up in the scans. Those are showing up in the muscle stocks group. If I come back down here again, this would have been a scan that I would have saved and created my filters for it. Again, those filters are over here under screens. You can get all of the filter settings there. Make sure you've got these set up. And then I can look to see which ones of this 213 muscle stock groups in that group, which ones are leading the pack, and that's what we're going to be focusing on, and that's what we're going to be looking for. And this stock happened to be one that pulled into the group, and several of them with big volume earlier in December. Okay. I believe those are kind of some of the core points that I wanted to go through today, and we'll pick it up again on Thursday. Thanks, everyone. Have a fantastic day.